Hello and welcome to NDTV Profit. We are at the JP Morgan India Investor Summit, and joining me today is Nitin Maheshwari, who is the head of M&A at JP Morgan India, and Abhinav Bharti, who is the head of ECM, Equity Capital Markets, and the most important segment in the markets today at JP Morgan India. Gentlemen, thank you very much for joining us on NDTV Profit. Nitin, let me start with you. You're the M&A head. How's the M&A landscape looking as we speak? Do you see enough interest coming in from companies?
Thank you, Sajeet. First of all, thanks for coming here and talking to us. So I'd say M&A, we divide it into two parts, the corporate M&A and the sponsors M&A. Corporate M&A has been quite active thanks to what's happening in Abhinav's world, where companies have access to capital, companies are being rewarded for growth. So we're seeing a lot of our Indian clients actually coming back to the M&A market, buying assets, using the currency, using the balance sheet that they have. As you know, corporate balance sheets have been very strong for a long period of time. But we're now finally seeing not just the top 5 business growth, but actually the next 50 companies, right, looking at M&A very actively. So that's the Indian buyers. The other thing we see is the foreign strategics who are very eager and keen on India. They are looking at India for growth. They have not yet, all the boardrooms are talking about India. That conversion has yet to happen. But once that starts to roll, we're talking big numbers in corporate M&A when both Indian and foreign buyers play the role. So as I summarize that, domestic consolidation is driving M&A right now. There's more that will come from foreign strategics. The second piece of M&A is sponsors, who have actually really driven a lot of the volumes in the recent past. They've all been in India for 15 to 20 years. They've seen exits. They've made a lot of money on very good companies. So we're seeing more of that come together, and that is actually driving a lot of M&A right now on the sponsor side.
The biggest flows are coming into the IPO market.
Yes.
If you look at foreign flows, this year alone, the largest number of flows have come into primary market and IPOs.
Correct.
How are you seeing the entire primary market, and do you see some bit of exuberance coming into this market?
See, there is certainly some bit of exuberance in certain parts of the market. But at the end of the day, if you look at how the returns that IPO markets have been giving, it actually goes to show that at least at the pricing point itself, the IPOs are getting priced quite reasonably. And what it is doing is that it is creating that virtuous cycle where IPOs and asset classes continue to give returns to investors, which is what is driving more and more investors to come and look at the IPO. So I look at it as positively. Yes, at some stage, that exuberance in certain issuances will start looking a very high number. But overall, I would say the health of the IPO market and where the IPOs are getting priced to begin with, which is where, let's say, the larger long-term investors are participating, that part is continuing to play very well at this stage.
How is the current IPO market different from, say, what we saw pre-COVID? How is it different?
I think two different things, both from supply and demand, if you were to look at it. From a supply perspective, the sectors which are now being represented in the public market space are expanded quite substantially. So historically, if you look at it, financials used to be anywhere between 35 to 40% of total capital raised.
Right.
This year, it is actually less than 15%. Now, I'm not talking just IPOs, but actually overall capital raised. What it all goes to show is that, number one, the financial balance sheets are in a very strong space or place, which is always good for the rest of the economy. And two, the newer sectors are starting to come to the market. So consumer tech is just starting out. I would say that is a space that has many legs to run on going for next few years. But even consumer retail, look at autos, look at DI. These are sectors which are really driving the next phase of growth for the economy. And the public markets are doing their basic fundamental job of providing capital. So on the supply side, that has one big change. If you look at it from the demand perspective, of course, the domestic story has been just phenomenal. We all know that India has now become a market which can stand on its own basis, despite whatever is happening on the global basis or global cues. Even if they are negative, you still have enough savings domestically coming to the market that can support out there. So I think from that perspective, the diversification both from the sectors and both from the sources of capital where it is coming. So, foreign investors, domestic investors, but between domestic investors, mutual funds, insurance companies, direct HNI, retail, AIFs, even pension funds have become very large and relevant now. So I think that is really bodes very well for markets overall.
We will talk about the role of domestic institutions.
Absolutely.
But Nitin, you spoke about new sectors coming in. Do you see enough of demand coming to you? People, companies coming to you asking for opportunities in newer sectors?
Yeah, absolutely. I think so. If I were to just prioritize, okay, which sectors we are busiest on M&A side, there's healthcare, there's technology, and technology has tech services lens and it has the consumer tech lens. Infrastructure has been very busy because we're seeing, a lot of assets which have, been owned by financial investors. Those continue to change hands. We're seeing the newest sector is the manufacturing right now. It's hard to call it newest, but it's in its new avatar where we are China plus one and Europe plus one, and really the world's manufacturing hub moving beyond services. That's an area where there's a lot of new assets getting created, which will all have a role to play in M&A, which will all be companies which will go public, not today, perhaps in 2 years from now or 3 years from now. But I think that's an emerging theme which we continue to see and have play. So certainly there's that new themes, new sectors which are emerging, and they will have a big role to play, and clients are asking about
and
that.
Many of them would be in the mid-size space?
I would say that, right? Mid-size is now for India is defined at least $1 billion plus,
yes.
right? So I think just the scale of businesses has also evolved. So we do see many of them coming in that growth stage to late stage, where they are becoming relevant candidates for M&A, for moving from growth equity to private equity and then to public markets. So that evolution of India is here and real, and that's what we're seeing across both of our products.
Private equity has been investing in the last 5 years, and those are some of the IPOs which are also coming into the market, especially in the consumer space and the tech space, which is there. How do you see that pipeline as we speak?
So that pipeline is obviously quite strong. If I were to think about what we are tracking at our end, I would say the IPO pipeline just for the next 12 to 15 months, call it between now to end of 2025, is somewhere around $30 billion. Private equity and venture capital in some form and manner would be present in at least 80% of that. A lot of it is driven by the fact that this, as Nitin and I keep discussing, this is what we call it as at least a third or the fourth cycle where private equity investors have invested, then exited successfully, redeployed capital back in the country, exited. So we are into that third or fourth cycle. And this time the confidence amongst financial sponsors is much higher that they could actually take companies where they have majority holdings that would have generally always gone through the M&A route.
Yeah.
But now they believe that they can take it to the IPO and still keep working with the growth of the company and exit over a period of time. I think that just bodes for the maturing of the market that we have seen in our country.
And they're getting the valuation they want?
Invariably, yes. It has a knock-on effect on the entry multiple as well. So
exactly.
A lot of the thesis for entry is driven by where the public market exit is expected to be. But so far, the numbers are working out.
Yes. We certainly see that public markets are a big enabler for M&A, private M&A, because it's a cycle that is playing out. I think more importantly, mutual funds have now seen how private equity have owned assets and responsibly sold those assets and made sure that companies have done well, right, even after they've sold.
Or are they making private equity responsible for the price, is it?
It is working both ways. I mean, the fact is the private equity investors also understand that having the IPO done properly is the first and the most important step, because if you don't get that in place rightly, and it's not just for mutual funds but even across the whole gamut of individual retail investors as well, that allows you to have more liquidity and the ability to do blocks. I mean, the other part of the market that we have seen is this year we have seen $23 billion of blocks taking place.
Yes.
That is primarily driven by liquidity in the market, and you will get that only when you do the IPO properly in the correct manner.
And and that's where the domestic institutions are playing a very big role in that sense.
Yes, they are certainly playing a big role.
They're keeping them grounded to value, right? Putting some money on the table when you go for an IPO.
Yeah, I mean, those are first principles always. That
we've been talking about it for multiple decades, but now it's coming into play, right?
Indeed.
It's a mutually dependent relationship, right? In the financial ecosystem, there is a certain maturity of company at which they go public, and then their mutual funds are better owners of that company. So I think that cycle continues, and that's where we feel there's that mutually dependent relationship is continuing to evolve and responsibly.
But mutual funds have evolved in a big way, right? Top 5 or 7 mutual funds which have more than 100,000 crores of assets are now, price setters for IPOs.
Correct.
And that's a good thing in some way?
It is certainly a good thing, because look, at the end of the day, the price signal should always be as wide and diverse as possible. That's the hallmark of having true price discovery in an IPO process. The fact that today we have, call it at least 15 mutual funds, 5 insurance companies, few large AIFs who manage capital to the tune of $10 billion or more, and then on top of it, the foreign investor, the long onlys as we call them, are on top. It allows us to actually have a much diverse books to or IPOs to come to the market. IPOs which are of, call it, I would say sub 4,000 crore size or $500 million can now be priced through various different selection of investors who may choose to participate. That was never the case earlier. Earlier in the pre-COVID era, the question that you asked me earlier, the difference used to be that we were always dependent upon, we need 5 or 7 of these foreign investors to come in to price my IPOs. That has changed. Today, those investors can still come in and I will price the IPOs, but if the mutual funds show up and they are, I would say more often than not required to be there, it works equally fine.
This pool of liquidity, it's interesting. It's 5 or 6 years back, mutual fund used to be participating, but the pool was not as consistent, right?
Yes.
You're getting 25,000 crores every month into mutual funds, and that is something which is a good sign for fundraising.
Despite all the movements we're seeing, right, we're still a very, very small proportion of our savings, your and my savings are in equity markets, and so is our families. So it's a big shift that ought to happen over next several years, and which has started. So that is what is happening with respect to the flow of money. And if you just go back, even we have 7,000 public listed companies, but the free float of each company is small, right?
Yeah.
So in terms of, if you look at the US, each company has like 90, 100% free float. So on both sides, we are starting with a very small base. So there's a moment that is happening where there's a shift that is that we are seeing live, but it's bound to happen, and it will be, for the next decade, there's no reason to believe that this trend should change. Abhinav, anything you'll add on that?
No, I think we are just hitting at the tip of the iceberg right now, the way I call it. To your number of 25,000 crore, I mean, that's just the SIP number.
Yes.
And I know there is this gross versus net dynamics, which we can get into detail.
We are not even getting into.
Yeah, but then there is direct money coming. So domestic savings which are directly coming into the market, or discretionary flows which are coming into mutual funds, are all on top. Our estimate suggests that this number is the actual domestic savings coming into the capital markets is a number closer to maybe 45 to 50,000 crores a month right now on a run rate basis. You add the foreign investors on top, which I know is correlated a little bit to the global sentiment.
Yeah.
But you're talking about, call it something like a $60 to $80 billion of total flows into the market on an annualized basis.
And that's good for companies going, maturing from the M&A. In one way, right? Because private equity, which was earlier looking for consolidation, now come directly to the market. But which are the sectors which are very active? You mentioned briefly about healthcare and other sectors which is there. Yeah. But within that, are you seeing the valuation issue coming in there? Because at some point in time we were looking at valuation of these companies, and then there was a funding winter which we were talking about. Now the IPO markets have again. Are you seeing some rub-off coming into the M&A market as well?
So we're not having transactions held back because of value disconnect, right? For the asset where there's a certain buyer who wants to own that asset and can create value above and beyond what it's being priced at, we're getting deals done. So we're not seeing that valuations holding an asset back. Ultimately, as I said, right, public markets are enablers here, where either the buyer already is public listed, so they see value for growth, or private equity coming in now has a view that, okay, next 3 to 5 years, if I buy this asset, I will take this public, and there will be a certain valuation that public markets could hold. So we are certainly seeing public markets as enablers. There are select situations where we advise clients that the best path for you is to go public, and those are transactions which don't need to go to private markets. So we're seeing each situation is unique, but certainly many transactions are getting done where we believe that's the right advice.
What about financing? That's been has been some of the issues for some of the consolidations as well. Are you seeing that easing out now?
Financing is actually that market has become very robust. So again, to fund M&A, we have access to different pools of debt capital, which is easily available, and we've seen large transactions all the way from 10,000 crores to $10 billion, right, where financing from bank market has been available. Now there are structural nuances on which instrument, which source of debt should fund a transaction, but we don't see any bottleneck because of financing in any transaction. All of our clients have had a very robust balance sheet. If you see just the last 3 to 5 years, everybody's raised capital at the right time, and there's no balance sheet constraint that anybody has. It ultimately comes down to what's the right thing for me to do, whether or not I should buy a business, whether it is the right, let's say, synergy value that I have and I can afford to pay. And once they've decided that, financing is the easier part.
Where is the largest number of queries coming from? Is it inbound or is it outbound for you?
So it's actually a great question, because there's a shift that we've seen in the last 12 months. So inbound is a lot of inquiry. All the boardrooms are talking about India. They want to invest, but that's been more organic, right? Let's hire more people, build more assets.
Organic, basically.
Organic, right? So that's what we're seeing. There have been select markets like Japan into India is a very active theme for us. US into India is active as well. But what's changed in the last 12 months is the outbound dialogue. So if you see what was happening, 15, 20 years ago when we saw that outbound flurry, that is now starting to come back, where some of our clients are now asking us the question for assets that they have tracked for a long time. They want to now consider those and revisit those and actually make those transactions. So we're seeing that come back as we speak.
And which sectors specifically?
It would be could be pharma, it could be industrials. It is also selectively around tech, right? And let's say, capabilities in tech services, for example. But we're certainly seeing that outbound M&A dialogue coming back.
You spoke about the fact that the demand for queries into the manufacturing sector has increased a lot, and that's primarily got to do with the government policies, which is looking at more manufacturing units in India, self reliance on manufacturing in China plus one or China plus two, what we are looking at. Do you see a lot of activity coming into manufacturing in India? Means foreign companies coming and setting up or acquiring some of the domestic companies, mid-sized companies?
We're seeing that flurry of activity. So far, it's been about coming in and setting up, because there are certain companies who want to start, greenfield and build it their own way. But that does take time. So selectively, we're seeing that translate into M&A dialogue, where either private equity or strategics are looking to own some assets. But it's still more about organic building, a lot of investment coming in, especially around, for example, EMS, right? You've obviously seen lots of announcements there, and just the way some of the supply chains are, for the largest mobile companies is moving to India. It's amazing in terms of how that's played out. But Abhinav, what will you add on that?
No, I think the thematic around global strategics looking at India has, and I know there have been media reports about saying, look, so much of outflows or monetization that has happened. But in a few ways, I would say public market themselves are showing the fact that a number of global strategics are actually tying their destiny in India far more resolutely. When you evaluate doing an IPO in India is still a one-way street, really. And while you're maybe selling only 15 to 20% and taking that capital to fund growth anywhere else in the part of the world, but the fact is an IPO is committing to the Indian market even far more, and we are starting to see that trend also take place. So from my perspective, I think we are starting to see this entire trend around global corporates, global strategics starting to look at India far more strategically, saying that, look, can I fund India from India itself? Can I fund my global operations from India itself? All of those options today India is able to provide to them.
Is supply chain going to be a big theme for IPOs and M&As going forward?
Has to be, because like I said at the start, the number of sectors which are starting to come and get represented in the capital raise activity has diversified and increased. Supply chain is a very important part of the entire ecosystem that you would start seeing. In fact, for certain sectors which investors can't play directly, supply chain could be the way to actually play them. So I think those thematics would become very relevant.
Nitin, for you?
Yeah, again on M&A as well, right? As people identify what are the gaps that I need to fill, and that's where M&A will be quite relevant. when private equity realizes that this supply chain is going to be 10x of what it is today in 5 years.
Or creating an alternate supply chain.
Creating an alternate supply chain, right? So indeed, we're seeing a lot of dialogue around that already, and a lot of capital being pumped in, both from strategic and private equity side.
Abhinav, investor profile.
Yeah.
5-6 years ago, we had those traditional investors. Today we have the younger ones, 18 to 45, investing in IPO, exiting on day one or day or first week.
Yeah.
But the profile has changed, and the money which is coming in into IPO is something big, which is there.
Yes.
How are you seeing this shift?
Look, I think the shift is certainly there. You can argue, yes, investors are investing and exiting on day one. The pie has expanded. I think that's the right way to really think of it. And what that means is that investors who continue to stay invested for the long term, that group itself, it may be lesser in proportion of the investors who are coming into the market, but that has expanded as well. To me, it is all signs in the right direction. It will have its own periods when you will slow down a bit. It'll become more exuberant, like maybe right now we are seeing a bit of it. But overall, those trends are in the right direction, with people being able to, the ease of doing and investing has become much better. You can come via mutual funds, invest through your mutual funds, or come directly. I think the other part is also on the global investor landscape. My view is that give it another 6 to 12 months, the size and scale of transactions that we are seeing in India will mean that Indian investments into India will not just be driven by emerging market funds alone. Some of the larger global funds will have their global PMs starting to look at India, because these are transactions of size and scale that becomes relevant on a global basis.
True. Means India already has 2.5% of the global, weightages in many of the indices, MSCI index. So that money has to come through it. But how do you look at India among the emerging markets? Do you see enough foreign interest coming into India because of this thing? And as part of the allocation, are they now looking specifically for primary issuances, because a lot of money of foreign money is coming for primary specifically? We haven't seen much of that kind of exuberance in the secondary market, but more on primary.
Yes. So primary, I would say it's still driven by, let's say, right now for the deals that are happening in the market, 90% will be driven by EM mandates that these global investors have. So emerging market funds who are investing. This thing will change. You're right that the specific money for primary market capital is coming through, because, like I said, primary market is where newer sectors are coming to the market, which are not necessarily represented in the secondary market. They will take time to get included in the index. So it's not necessary, because an IPO does not get included in the indices on day one itself. It takes them 6, 8, 12 months or something like that. So it's a period of time that will happen, and people don't need to wait for, or active investors will not wait for index inclusion to start allocating capital.
Nitin, final question to you. Do you see Indian companies' balance sheet now good enough to go and be aggressive in the cross-border acquisitions?
We are already seeing that. A dialogue has started where, one, their balance sheet, second, their ability to raise capital, both equity and debt, is allowing them to think differently. Think about what are the gaps I could fill, which are the kind of businesses or capabilities I could add. And we are starting that already play out, and we expect that to expand further.
Nitin and Abhinav, thank you very much for joining us on NDTV Profit.
Thank you.
Thank you.
Thank you.
Thank you.